A Fed pivot would not trigger a market rally. It would not trigger a stock market rally. The Fed pivot, it would be in response to a disaster, and it would be too little too late. And this is what historical data shows, that bull markets do not begin with the Fed pivot, but months after.
Months after the Fed pivots. So the question is, how many months is that actually? Is it 3 months? Is it 6 months? Is it 9? Is it 12 months? I want to know so I can be prepared. Brian just said when the Fed pivots, it's not going to trigger a stock market rally. When the Fed pivots, it means that the Fed is actually going to lower interest rates, because as we know, the Fed has been raising interest rates to fight inflation. Right now with this whole bank crisis, eventually over time, if the Fed keeps hiking or keeps rates high, something in the economy is going to break, a recession is going to happen, and things are going to start looking very bad. So the Fed actually eventually needs to pivot, starts to lower interest rates so that they can stimulate the economy and fix the whole bad situation that they've created. But hopefully inflation at that time is under control and it's down.
I believe that Jay Powell and friends will try to fight inflation for as long as they can until something breaks.
When the Fed pivots though, the economy is bad and it's hurting. It's only months later does the stock market actually begin its next bull run. And so that would be a great time to begin to buy back in. So he's probably referencing this chart right here. This chart has been very popular, passed around all across social media, Twitter, and of course shared by financial influencers. So if I go to the actual chart itself, the majority of the decline in the bear markets occur after the Fed pivots. So it's only after the Fed pivots does the market actually bottom. And of course, as we know, buy low, sell high, that would be a great time to buy. So that's a really great chart there, but the quality is actually kind of low and it doesn't show when the exact dates of when the Fed actually pivots and when the market bottoms. So I found this really great one here by Colin Talks Crypto, where he remapped it and it shows a lot more details of when the Fed pivots and when the stock market actually bottoms, specifically the S&P 500. So anything that you see in orange here is the S&P 500 chart, and the things that you see in blue are the federal funds rate, okay? And these vertical lines right here is when the Fed pivots, and when the stock market bottoms is shown in orange. And we could see the 7 different times it's happened. If you can right now, definitely hit that thumbs up button if you appreciate this video, and also subscribe to the channel for more videos like these.
Bull markets do not begin with the Fed pivot, but months after.
So taking Colin's chart here and some of the dates at the bottom, I did some quick date math and I added up how many months it took from the pivot to the actual S&P bottom. Some of them can be quite surprising. The first example here is 5 months. 2 months. This is a year. From 81 to 82, it took a year from the pivot to the actual market bottom. In 89 to 90, it took 17 months. 23 months. So this is essentially just under 2 years from the pivot to the actual bottom in 2000 to 2002. And this one here took 19 months and 8 months in the most recent example from 2019 to 2020. Sometimes it could be a couple months, but sometimes it actually could take over a year to even almost 2 years from the pivot to the actual bottom of the stock market. So if we're preparing, it could take well into 1 year or even into 2 years till we actually find the bottom of the S&P 500. So the reason why I'm making this video now is because there is some strong expectations of the Fed to actually pivot sometime in June or July of 2023. So if we were to actually go ahead and extrapolate some of these months that we see here, how long would it actually take to see the actual market bottom, assuming that the Fed will actually pivot sometime in June of 2023? In the last FOMC meeting that happened not too long ago, Jerome Powell did tell us to not expect any rate cuts to happen all of 2023, but certainly that's not what the market is expecting after seeing already the deterioration of the banking situation, the banking crisis. They think that we could potentially see a pivot sometime in June or July. And so let's go ahead and take June as the date of when the Fed will pivot. And if we could just add up a couple of these months right here, we can actually predict when the market could potentially find its bottom. So it's looking like anywhere from around 8 months all the way up to as far as 23 months. So let's go ahead and pull up the S&P 500 chart. This is the SPX chart. And I went ahead and I dropped in this yellow line. And this is the assumption that the Fed will pivot in June. So if the Fed pivots in June, if we pull out 8 months later, we could potentially see the bottom of the stock market in February of 2024. And if we pull out all the way to 15 months from the pivot, that could be into September of 2024. And if it's as far as 19 months, that could be December of 2024. So it's looking very, very likely that we could potentially see the bottom of the S&P 500 sometime next year, assuming that the Fed pivots in June. And if we take a look all the way out into 23 months, which is the worst case scenario here in 2000, where it took 23 months from the Fed pivot to we actually found its bottom. So that could take us anywhere all the way out to May of 2025. I think that it's safe to assume that we could potentially bottom out sometime in 2023. And also I dropped in these red lines right here. These red lines indicate how much we could potentially fall to. So in prior bear markets, we usually fall anywhere from about, 30% all the way to about 50% from the all-time highs. First one here, which is 25%. That's about where we were back in October of 2022. After that would be 30%. It makes a lot of sense. There seems to be a lot of support here, and 33% seems to be a lot of support as well. And then 40%, this is where we were at 40%. 45% would be all the way down here. So if we were to predict the markets to fall anywhere from 33 to 40%, and it took about 15 months to actually find the bottom, we could find ourselves somewhere at around here to actually see the market bottom of the S&P 500. But of course, we know this is all, in Benjamin Cowen's words, dubious speculation.
In terms of the stock market, I believe that's going to drive the S&P 500 down to at least 3,600.
Brian thinks the S&P 500 could go down to as low as 3,600, which would essentially bring us back to the lows of October 2022. And certainly it could go potentially much lower. And how he does plan on profiting off of the fall of the S&P 500 is buying some SPDN. That's ticker symbol SPDN, which is shorting the S&P 500. So when the S&P 500 price falls, SPDN actually goes up in price. Assuming that the S&P 500 bottoms sometime in 2024, that means that we could also safe to assume that Bitcoin could potentially also find its bottom sometime in 2024, considering that Bitcoin follows indices as a whole pretty closely. And so that could be either the beginning or the middle or the end of 2024. That's when I will certainly be preparing, saving up my cash, and buying when the market is low. All right, guys, that's about it for the video. If you enjoyed it, definitely hit that thumbs up button. Also subscribe to the channel. I'm trying to get this channel monetized. So I need 1,000 subscribers and 4,000 watch hours. So if you are still watching, you are freaking awesome. Thank you so much. All right, guys, that's about it for the video. My name is Jimmy Invest, and I'll catch you in the next one. Peace.